Welcome, everybody. My name is Alish Eisner of the Canadian Money Talk. This is my friend Rob of the Mindful Investor. And welcome to part two of our personal finance podcast, if you will. So we will begin where we left off previously. We're going to start on question number 8. And if you haven't had a chance to look at the first part of our podcast, please make sure you do that.
Okay, we'll move on to the next question.
All right.
Yeah. Do you plan to retire early in a couple of years? What do you see yourself in 5 to 10 years from now? What are the top three things you're looking forward to?
So for me, I'm going to work in IT doing contracts for at least a couple more years, doing short-term contracts. And then I'm probably going to call it a career at that point. Even now, as we talked about, I'm financially independent. I don't really need to work. I do it because you never know, do I have enough? You know, Actually, it turns out that a lot of people who retire, they have trouble spending because they're just used to accumulating, and they're just not sure what will happen if you retire at 60. You could live till you're 90. What will happen in the next 30 years? So they're afraid to spend, and then of course then they can't spend it in the last 10 years because they can't really be all that active. So for me, is it really enough? Which is why I keep working. Or in some cases, if the market just tanked, then it's great to put more money in. So that's another reason why I keep working. Um, even having like $100,000 cash emergency fund is something that I keep dreaming about. It's something that I'd like to do. So in 5 years, I think the 3-month contracts are still going to be there. I think I'm going to be day trading or options trading at that point as well, kind of supplementing my income. And I've been fiddling a little bit with options, but not to the point of or as yourself, but not really making enough money off of it. I'd like to engage some startup businesses, whether with capital or as advisor or participant, whatever it is. And eventually, and this is probably the 10-year goal, would be to be teaching at college or high school about investing and personal finance. I'd like to start that earlier on, but I don't think it's really going to develop all that quickly. And I just think I can add a lot of value to people because people leave high school, people leave university, college, and they don't know how credit cards work, about investing, what they need to do. And then they wait until they're 40 or 50 before they truly start. And by then, all of that accumulated interest and time that they could have used, it's all gone, right? When you're 20, you have lots of time. So there might be a certified financial planner designation in my future. I'm not quite set on that, but um,
Okay.
and the three most things that I'm looking forward to are having more time for everything, not having to go somewhere first thing in the morning where I wouldn't normally go to, or even to have to log in at 8 o'clock and so on, and doing lots of reading. I've got so many books, and I'm just like last night I was looking at my bookshelf. It's right there.
Oh yeah.
I was looking at my bookshelf. I'm like, this whole series. I've been reading the series. It's 14 books. I'm on book 8, and I started reading it literally 30 years ago. That's when the first book came out, and the author has died. The author has died, and I just like, yeah, it's terrible.
Do you mind sharing the title of that series?
It's a fantasy fiction, The Wheel of
Oh,
Time.
Oh wow.
The Wheel of Time. The books are always 1,000 pages thick,
Oh geez.
and the one that I picked up just now, it had been sitting on my shelf. I remember reading it on a SkyTrain, and then just started printing out articles about investing and reading those instead on the SkyTrain, and the book eventually got put on the shelf, and only now did I pick it up. So that, and if I can throw in number 4, going to the gym during the day when nobody's there, is kind of my dream, rather than going at 4 or 5 o'clock when everybody's there. So that's
Yeah.
my 5 to 10 year plan. How about you?
It's let's elaborate on your side a little bit more. There's a there's a point you mentioned, like, is it enough? Is it ever enough? Like that's question is like, is there a certain number that you're targeting that you kind of use like a 4 or 5% rule type of thing, or that number just keeps growing? I bet 10, 20 years ago, this number is much lower than what it is right now. Like, I
Well,
mean, the target has moved. Let's say 10 years ago, you would say, if I reach 2 million, I'm done there. Like I can just live off the passive investments. Like I get like 100K per year, I'm good for that. But now I want 4, I want 5, I want 8. Like is there a certain threshold that we just reach and then we stop there, or is it just an ever-ending like climb?
well, it's a never-ending climb. I think. I think we as humans, number one, we need something to do, right? You don't actually want to sit in your rocking chair uh, the rest of your life for the next 40 years. It's just something to keep pushing yourself forward. The other thing is, either of us could find a nice girl who will easily spend all the money that you have and more. That could change in an instant. Don't worry. And back in March of 2020, we had a 30% drop. December of 2018, we had a 20% drop. So you could have a 2 million, and you're like, okay, this is looking pretty good. And then suddenly your paper net worth is 1600, 1.6 or 1.4. So there is that.
Okay, but like during the drops, like did they actually cut the dividends while like that was the main goal of the whole dividend investing? Like we focus on how much dividends we're getting, right?
That's
Not the paper gains.
that's right. I mean, if it's just kind of a quick drop like the 2018 was, for example, where it came back really quickly, the companies, nothing really impacted their business in that particular one, and so there would be no reason for them to cut the
Cut dividends,
dividends.
yeah.
Even in March of 2020, not that many of my companies cut dividends. But I mean, if the yield is 8-9%, you're like, this is dangerous, and then eventually the company will say, well, I mean, that's not a yield that you would normally get, and so they'll cut the dividend just to get it back to 4 or 5%. But I mean, the company stock price usually goes down for a reason, meaning they're doing poorly, and then they do cut the dividend ultimately. So everything sort of balances itself out. But
Okay.
you're right. If you have a crash and they keep paying the dividends and there's no danger of the dividends being cut, there's no reason to really worry. Uh,
Yeah.
but so, like, what do you think is enough for you? I mean,
No,
you're
I don't know. I just don't know, because if we're shooting for the dividend payouts to live off, and we care so much about the stock price itself, so which one do you care more about? And if we care if we care so much about the stock price, then we're speculators or growth investors and not so much dividend investors. Like where do you draw that line? Like, is it like we call ourselves dividend investors, but but are we still like 50-50? We still care so much about the paper value of the stocks?
Uh, well, I mean, the total return is always the stock price change plus the dividends on an annual basis. But I understand what you're saying. Uh, I mean, if you ever had to liquidate everything, I mean, that's not really a realistic thing. But if you had to liquidate everything, you'd have a smaller pile
Right.
if the price had dropped. Uh, Everything sort of works in percentages. So if you're expecting to get 5% cash flow off of your portfolio and your portfolio drops 30%, you could sort of extrapolate that. So will your cash flow. As we said, it may not, it should
Yeah.
not, but it could.
Yes.
Uh, and if you ever want to buy a giant yacht or something like that, then you do need the actual paper value.
Okay. So this number really doesn't depend on dividend yields because that can change. And
Well, I mean, your net worth is sort of how you're keeping score, if you want to look at it that way, and so you want it to keep going up. I think we stock investors in general know that the stock market keeps making new highs. So even if it just dropped, you know that if you wait long enough and you're sort of in the right investments or index, then you know that it will return as inflation keeps going, population keeps going, new technology keeps making companies more efficient. So, like, you know that it's going to keep making new highs. Um, you know, the whole 4% rule, that sort of used to be the gold standard because there was a study way back when. I don't think the 4% rule really applies anymore. I would say you should be looking at three, maybe three and a half, because when they did that study, bonds actually paid a decent amount of
right.
interest, while bonds don't really pay very much interest now. So you could have a fairly safe portfolio and be making 8-9%, and you can't do that today. You have to have a pretty risky portfolio to be making 8-9%, and only 2 or 3% of that is going to be in dividends. The rest is going to be in appreciation.
Right.
So that 4% rule, I wouldn't stick to it. But that's kind of which can tell you what am I targeting, because
Yeah.
you've tracked your expenses. You know that you're spending, you know, 40 for ease of calculation, you're spending 40,000 a year.
Yep.
So according to the 4% rule, you need to have $1 million
Right.
that you're going to pull interest, you're going to pull dividends, and maybe sell some, and
Yep.
that's going to give you your 40K a year.
Yeah.
So that
But
way,
this whole 4% thing, like I thought about it a little
yeah,
bit, and then it doesn't make sense at all because that's assuming you don't touch the principal forever. So by the time you pass, you're leaving that 3 mil on the table.
yeah. To be honest, I didn't read the study. I just sort of understood it.
Yeah, no, but like you said, like you have 1 mil and 4%, you take up 40,000 every year. So you're not touching the principal at all. And by the time you're gone, you still have that 1 mil there.
Yeah,
So it's really like overestimating. It's actually should be higher than that. It should be much higher. It should be like even double, assuming, let's say, starting year 70, when you're 70 years old, you take stuff from the principal and the dividends. Like how much you can take from there, because you should take some stuff off the principal, right?
yeah. So the 4% rule doesn't really work for the retire early people. It sort of supposed to work for somebody who starts at 60, 65 and is going to live maybe 20 years. And that's where the 4% rule works.
But
It's
then,
not,
but then even with that, they are not touching the principal.
I sort of understood it that it would bleed down your principal to close to zero, to around your average age of life. You should sort of end with zero. So,
Yeah.
so if you selected the investments that pay you 4% dividends, then
Right.
it would be, as you say, you're not actually touching the
Touching.
principal.
Yeah.
The principal is still worth a little bit less thanks to inflation each year. So
Yes, a little bit.
you're still sort of bleeding that. Uh, but if you look at the S&P 500, I remember the average dividends for the S&P 500 were like 2.3% yield.
Right.
So that means you're still having to pull maybe 2% every year by selling actual stocks. So that
Right.
way,
Right. But then on average, like with the capital appreciation and the dividend, it's like 8%, right?
yeah, you should be able to, thanks to that, you should be
Yeah.
able to spend technically more. Uh,
Right.
I think when they ran the numbers, they also accounted for some years that there's going to be losses where you still have to pull 4% because you want to eat. So I think that affects things as well. You're not just pulling the 4% on a good year. You're pulling at it all years. Uh,
Yeah.
I mean, ultimately, you can run those simulations I mentioned regarding this. I mean, the study was done in the 90s, so I think technology has advanced, and we could probably do a better job of it.
Yeah.
Uh, it also takes a special person to actually have an all stock portfolio, which generally is the only one that can even use the 4% rule. It takes a special person to stand up to that volatility, because if you have a balanced portfolio, if you have mostly bonds, which once you're retired you sort of should,
Right.
you're not going to get the returns anywhere near 4%.
Okay. Okay,
Yeah.
that's right.
So uh,
Okay.
but so you're are you kind of aiming to do a 4% rule, or are you, I'm sure you're way
No,
beyond that now.
no, I mean, I don't want to spend 40 hours in a year, so my burn rate is really low, and
Yeah.
I find I still like to answer these questions. Do I plan to retire early? No, I don't ever plan to retire. I always have projects to get into, and sometimes I get some profits out of it, and I can invest those, and then I'm always in the stock market playing options, like speculating here and there, and then I have some down years and some good years, but overall, hopefully, I'm up. But like I'm always active on things. I'll never plan to just sit back and just like sit on the beach and sip on mojito, as I said before.
I Yeah. Well, I mean, you and I have kind of different occupations. You're a professional investor and maybe trader and business person. I'm an IT consultant that has investments on the side in order to become financially independent. So for me, it's different. I would actually stop working and volunteer at the SPCA, or like I
Okay,
said, like go teach at schools.
right.
For you, you maybe don't think that you're actually working right now. You're just having fun and you're doing stuff that you enjoy. So kudos, you picked a right career. Good for you. If you find it stressful or something and you just kind of want to put everything into index funds and some dividend paying stocks and call it a day and not have to spend hours at the screen watching things like day traders do, right? Maybe you don't. So yeah, I mean, day traders, right? They got their four screens and they're
Yeah.
they're watching for a pattern. It's like, okay, bye. I'm like, oh, that sounds awful.
No, that's a whole job in itself. Like
Well,
there,
exactly.
there's not one day that I stare at the screen more than 30 minutes.
Yeah.
And
So,
that's the way like it should be.
yeah. So say you were doing that, then you would actually say, okay, I'm not going to do that anymore. So that would be quote unquote retirement. Uh, if people do what their hobbies are and they
Yeah.
do it for fun, then you could say, well, okay, that's not a job. So that's again a philosophical discussion.
Yeah.
So, anyways.
Yeah.
All right, I think, and anything that you look forward to? I don't know if you touched on that.
Look forward to
Nothing's really going to
well
change for you.
well like 5 years, 5, 10 years down the road is hard to say, but in the near future, I like some of the things that you want to do, but I'm currently kind of doing, like sharing these ideas in finance, investing, options, and such. And I do plan to like launch courses, like free courses, and write books. Even that's like some of the shorter term goals. Yeah.
I think in the long run, we all need something to do. There's a very small percentage of people who just want to lie in bed all day and watch Netflix. If you keep your mind engaged and you're learning, that will also keep dementia away, for example,
Oh
and
yeah.
it'll do all sorts of great things for you. And if you're physically active, you know, that's how you live till you're 90, 95, and that's when you need your $10 million portfolio at that time.
Yeah,
But
yeah, I believe like looking at companies, it really gets your mind going as to like how the current landscape is and what the future brings. That like brings your imagination, and then if it comes to fruition, then you get the capital gains as well. So like that thing is could be ongoing for me for the next 30, 40 years.
yeah,
Yeah.
and you don't know what will happen. So, for example, in a couple of years, you could meet that nice lady. Maybe she won't spend all of your money, but you'll have a child, and then you'll like, okay, I want to provide for this child, and I want to have I want to leave them a nice little nest egg when I'm gone, right? And if you could leave them 10 million, which let's say will be worth what 3 million is today, then you'll set that child up pretty well in life. So
Yeah.
so things could change for you. Like everything is hunky dory right now, but you never know what life will bring. So it's always good to kind of keep pushing. If like I know I'm not going to beat Warren Buffett, or I'm not going to have $1 billion, but why not challenge yourself? That's kind of how I look at it.
Yeah. That's
All
very cool.
right, whose turn is it to read?
You can read this one.
All right. Do you keep it a secret from your coworkers, friends, and family that you're financially independent? Do they feel uncomfortable whenever you share your financial success with them? Why do you think money is such a taboo subject in society?
I just believe like that even in the Asian culture, we just tend to be more conservative and we don't share as much in the bank accounts what we invest in. I I tell I tell my friends I invest in stocks like like 90% of my free cash flow is in stocks. And they they think I'm crazy. It's like, oh, you're just a gambler. But I call myself an investor, which is which is it could be the same thing. And yeah, I think I do try to share things with them, but everyone has a different level of like how much they want to share, how they're raised. Like some of my friends don't even want to hear about it. They just want to talk about hockey or the next PS5 or whatever game, and they don't they just give all that responsibility to their financial planner. And I try to I and every time I say just your financial planner probably makes like down the road if I make like half a mil off you, but they don't believe me, but they just trust their expertise, I guess, because they do have a degree and they're like full time on this, so they should be better. So they give the whole account to them to manage. And I think you should really take the matters in your own hands, not just your financial matters, but everything really. Yeah.
Yeah, and so why do you think money is such a taboo subject in society, that nobody wants to talk about it, and expanding outside of the Chinese culture? Because
Why do I think so? It's just like even in school, no one they never taught you this in school, so they don't think it's important. They just don't think that we should talk about it. We were just raised that way since like grade school, high school, like in university. There's no such courses. it's just how the culture is. I can't really expand too much on it. It's just what you see with your close friends or with the whole society.
Yeah, I think money's considered a personal topic,
Yeah.
and there's sort of a very bad circular thing going on because schools expect parents to teach their kids about money because it is personal, and so the school doesn't teach anything, and then the parents don't know, and so they don't teach their kids anything, and then they send them out into the world, and the kids sort of wander around in the dark, and then they don't teach their kids anything, and it just kind of keeps going. And of course, depending on your conspiracy theory friendliness, you could say that the financial institutions, financial planners, and so on, that they're propagating it. They're making it into a dark art that only they can help you with, and credit card companies are happy that you don't know that you have to pay it all off, and so they make 20% off of you. Your financial planner makes a bunch of money off of you and coming straight out of your pocket. Um, yeah, for me, I talk to anybody and everybody who will listen about investing and about personal finance. It's my hobby. It's gotten me to where I am. So I've done lunch and learns for coworkers where I get them into a room. I show them a presentation. This is what a stock is. This is what a bond is. This is how a mutual fund works. And so so I think from the amount of knowledge that I have, I think people suspect that I've done fairly well. Hopefully, they don't just think that I know the strategy and haven't actually implemented anything.
No, you're trying to sell them products.
Yeah, and actually, the fact that I'm not selling people anything, I think makes me, or should make me, valuable. I don't think people really take as much advantage of me as maybe they could, and then some people take too much. But so I've shown my trading account to people. Obviously, I've shown it on YouTube as well now. But I if somebody were to ask me outright, "What's your net worth?" I would tell them happily. I'm not trying to brag or anything like that, so it's not a secret. I just don't blurt it out in casual conversation. My family's kind of funny about financial independence and maybe not having to work in the future. Uh, they come from Eastern communist Europe, former
Yeah.
communist Europe, where everybody except for the people at the top were very much encouraged and you could say brainwashed into working and thinking that work is good. And so they're like, "Oh, are you lazy?" I'm like, "No, I don't think so. I've been in IT for 20 years. Look at the gray hair. Like, what are you talking about?" I so anyway, whenever I bring up the subject, it never seems to go over all that well. I think, despite being from a completely different culture, I think it's
It's very similar.
yeah.
Very similar.
And so the money being sort of a taboo subject, it's it's a culture thing. Like, to me, it's not personal, but like one of my friends said that his daughters don't know how much money he makes, like a salary or wages or whatever. I'm like, well, maybe there's no reason to tell them, but like now the daughters are 30 years old. They missed out on they missed out on 20 years of compound interest, and they don't know anything, and I I see that as kind of sad, but yeah, it's a to me it's funny because people will project that they're wealthy by buying a big house, buying a boat, buying a Mercedes, BMW. It's like, look at me, I'm doing well. But then nobody will actually blurt out, "I make $100,000 a year. I make $150,000 a year." So you're showing me that you're doing well, but for some reason the actual number doesn't want to come out, which
Yeah.
I find sort of strange. Anyways,
Yeah, they just want to imply it.
yeah, yeah, but people kind of telegraph that
Yes.
they're doing well, right? And I mean, they may not be. They're just showing that they're doing well. And I mean, everything could be leased and rented and mortgaged up to here, but they have nice things. So I mean, everybody gets to live their life the way they want to, as long as you can keep making the payments, you can keep driving the nice car. That's up to you. But yeah, the ignorance in society about money, I think, is unfortunate. Uh,
Yeah, I don't know if they'll ever implement it in like grade school or high school even, but like they do have economic courses, but that has nothing to do with finance.
no, no, and yeah, I mean, yeah, in grade 12, I took a course where we looked up the stock prices in the newspaper back then. That was back in the 90s.
Newspapers.
Yeah, newspapers and stock prices in the newspaper. What are you talking
Oh,
about? Actually,
yeah.
if you pick up the Globe and Mail, they still have them. I saw in my dentist's office. Uh, but the stock numbers in the Globe and Mail, and it was a paper. But it wasn't really practical, you know. Like we just track the stock price, and it's like, okay, you happen to pick a stock that went up, good for you. Like it was obviously no actual money involved. Um, but like just
and and
yeah,
that's because of the teacher, right? Like you are only as good as your teacher. If the teacher doesn't know too much stock picking or stock investing, then that's all they can do. They can give you a stock section, the headlines, and read this, pick some stocks, and then in a month we'll track your performance. That was my game. I did the same thing actually.
yeah,
I had no idea. Like, okay, and the month it's gone up 3%, that one's gone down 5%. So what? Like, can you tell me more about it? Like these companies, what they do, why it went up, when it went down, like how does all this tie to the economy, right?
yeah. Yeah, it's I took a macroeconomics course in university, like second year,
Yeah.
and that was actually somewhat practical, where they talked about GDP and interest rates and
Yep.
fiscal policy, monetary policy. I still got the textbook, and I'm like, this is good stuff. Like even
Yep.
now, I'd like if I leaf through it, I'm like, oh, I should have read it the first time. Uh, but anyway, I definitely picked up, but and then there was a finance course where we spent one class, a single class, going through the ratios for a stock,
Oh, okay.
right? PE, PB, and I'm like, current ratio,
Good.
okay, like just 50 minutes, right? And just rattled off 20 different ratios. I'm like, okay, I don't know what that means. I don't know how to apply it. Gone, right?
Yeah.
And I think I mentioned I mentor SFU students, third, fourth year, and last one was an MBA student. He's like, yeah, they don't teach us anything at all about investing. Like he was ready to get his MBA, and he's like, as far as investing or personal finance, there's nothing, right? Like
Yeah.
now, if it was a philosophy major, linguistics, okay, right? Still needs to have a checking account, will need to have a credit card, and if they ever want to stop working, they should have a retirement account. But yeah, they don't need to know the nitty gritty. But for an MBA student, come on, right? And that's where I think I can create a course, maybe through the student society, do a 90-minute course, and then maybe turn it into like an actual full-fledged class. uh, I'm not quite sure under what major it would fall, or how that would work, but it would actually be something practical.
It
um,
would be, but for a whole class, for a whole semester of I guess it would be pretty in depth for a
Um,
whole semester.
yeah, I mean, maybe it would be 2 credits instead of 3 or 4, or whatever it is. Maybe it'd be 1 hour a week, so it'd be 13 classes. Uh,
Yeah.
I don't know. I'm sure I could come up with enough content. I Yeah, or like a 2 hour class just to get people interested. Because if nobody's going to teach you, then you need to see that it's important, and you need to at least take the initiative yourself at that point.
Yeah, but
Uh,
once it's like an optional recreative class, like people don't take it seriously, and they just it's hard to really ingrain it into them.
well, then that would be up to me, right? If I'm a teacher that doesn't get people interested, then I can't make them see how important it is, then that's on me. Which
Yeah,
I'm hoping
yeah.
I would do okay. But anyways.
Yeah, so that moves us on to the next question pretty smoothly.